Wagner here, approximately 10 o'clock in Honolulu, 4 o'clock in New York, on Friday. Finally, happy Aloha Friday, as we say on the islands. It is November the 15th, 2013, and this is the Daily Report for Gold and Silver, our weekend review. This week, interestingly enough, started out with a whimper, but ended up with a slight rally, a rally off of the lows of 1260. You can see that here. This happening on the 12th day of November, just a few days ago. Currently, we do have gold slightly higher, up about $2 on the day, $1.90 on the day. You can see our current print is 1288.60. The low has been 1280 exactly, and the high has been 1291.40. Silver trading quietly today and is actually showing us that it is unchanged at 2074. We'll talk about a couple of key levels that we've been speaking about all week, particularly 2068. A close above there, of course, to me is showing some support in that area, but we'll talk about that towards the end of the show. Next week should prove to be a most interesting week, as we do have a number of key fundamental pieces of data coming out. We will have Bernanke speaking. We will have minutes released from the last FOMC meeting, although that seems like that's happening rather quickly. We also have some employment numbers coming out. On a technical basis, this is what I'm looking at. This is a 60-minute chart, of course, that we started the show with just to kind of talk about prices. But what really jumps out at me when I look at this chart is this particular trend line that is developing in the marketplace itself. Simply by, I've discounted this low down here. I've started it on these lows, and I'm trying to really go into the bodies of the candles. And we've been trading well above this particular tack so far. We can, without a question of a doubt, say that when the market came down under pressure, and we saw the pressure really starting at about 1330 right in here, but as the market came under pressure, we had that low that we were concerned with. That was the low at 1250. We'll look at another chart to kind of put that into perspective. And we actually did get a low that was $10 above that point, this being a real print in here, and this print being roughly at 1260 per ounce. Now, as we spoke about in the last chart, I kind of wanted to look at this previous low. The previous low at around 1250 that I'm referring to is this low here, came in at about the middle of October, and this is really after the tremendous fall from grace in which we had probably one of our more dynamic rallies, at least within the last 6 months. We saw the market go from 1181. It trades all the way as high as 1435, I believe, and then from 1435, it retraces quite a bit. We'll put a fib retracement up there so we can put it all into alignment, but we hit this low, this intraday low at around 1250. Now, I have gone ahead and added a basic fib retracement. The retracement that I've added is simply of this rally, and when we look at the retracement was certainly more than 61%. 61% is roughly 1276, I believe. Correct, 1276. And then when you go down to the 76% retracement, of course, that falls far below that, this being 1240, and the really intraday low being around 1250. It's certainly no cigar. It falls really in the middle of these two fib retracements, and you can tell when the market's plotting on a retracement point, because you'll get either the real bodies, or you will get a low that goes right to that point, as we can see not only here, but here. Now, when this market did dip, it did find support, but as I said, it found support just above the 76% retracement level. Now, when we look at this next move up, the market really stalls at 1360. And really, to make any kind of sense of 1260 in terms of retracements, we really do need to add another one. The first retracement, of course, was this long rally. I've added another retracement which begins at the top, 1435, and goes down to this bottom at 1250. Now, that's the dots represent this retracement right in here. And when we do that, what we can see is that 63 actually does make some, or the high of 60 does make some sense, because it's a 38% retracement from this move down, this move back up here. You can see that that comes in at 1363. So that number is pretty critical. And of course, we have been talking about the fact in terms of a much longer term resistance line, 1335, having real significance, and that's right in here. We'll talk about that as we pull up our next chart. Now traders, we are looking at a daily chart. This contains our most current Elliott wave count, Japanese average format, of course. We do have MACD just below it. But our daily viewers were well aware of the fact that as this market came down through last week, and the way that it bounced off of the 1260 area, because as it came down, my first thought was, let's see how, if and how it reacts when it gets to 1250. We can obviously see that it was far and quite shy of that point. And so when we look at the basic Elliott wave count, to me, we are firmly in a third wave, and that third wave is probably going to be composed of a 3 or a 5 count, and we have completed 1 and are probably in 2. Let's go ahead and compress that chart so I can give you a better idea of the big picture right now. And I've done just that, and when we look at the chart, let's look at it this way. We had our long wave 3 that came down. That's the real fall from grace, 1800 down to 1180, 1181. That completed, I believe, a bear count wave 3. Wave 4 is going to be what's called a counter wave. And on a counter wave, of course, it's going in the opposite direction of the trend. The trend has been down. So you get an A, a B, and then your C count, and that's your counter trend in a bear count. From there, I believe we went into, this is wave 4, our final completion, or wave 5. I think we had a significant wave down 1. We had a fairly strong wave 2 up, and we are currently in this wave 3 of 5. Now, by definition, wave 3 should not be or cannot be the smallest of any of the impulse waves. 3 is the major impulse wave. And when we consider that, if in fact that is how the market unfolds, what we have to do is consider the length. And to do that, I'm going to just use a scalable line. But if we look at the market move that we saw within this wave 1 right here, again, it's scalable. So if I move it down to the top of where we started our wave 3 here, if it in fact simply equals this first wave down, wave 3 would really take us back to these, I call them historical lows at 1181, because it's the lowest price that gold has been ever since it hit that dramatic price rise a few years ago of 1920. It's been meandering lower, but this is the lowest point that it got. The real key, obviously, is the current support level. And the current support level really is from 1250 to 1260, because we've got these two sets of lows right in here. And these two sets of lows, of course, are the lows that need to be taken out if we're going to see this market drift lower. Personally, I don't see the market going that low, but straightforward Elliott wave theory tells us that that is a distinct possibility. When we consider the potential for having this 3 of 5 significantly taking out the lows that we have seen at around 1250 and 1260, you can really see it when we pull up this bigger chart, what we're looking at. And this, of course, is our big picture. 1 through 5 comes in, A, B, C. We go into an impulse phase, but we get an absolute failure. We see the market top off at about 1800. Wave 1 in our bear count, wave 2 in our bear count, then to 3, counter wave being 4, and then now we are in this fifth wave having 1, a 2, and then a 3, terminating somewhere at or below these current lows of around 1250. Do I believe that we'll see the market go to that point? Right now, I'm of the belief that as long as we're holding 1250, we have an opportunity to see this market find some sort of a base. The other thing is that at any point, a market can move from a bear count to a bull count or a bull count to a bear count. It happens when you get a fundamental shift in market sentiment. And we are going into the Thanksgiving holiday here in the United States. And then, of course, from there through New Year's, we are going to get light trading. We are going to get the volume going down. We are going to get many of the traders absent out of the market. It is when I take my annual vacation, which is between Christmas and New Year's, and what I typically do is I have a limited number of shows. I monitor the market, but I don't actively put out a daily report, although last year I did, and the year before I put out roughly 2 or 3 per week. But as I said, that is when traders kind of hibernate, regroup, re-energize for the next year. And the key that I'm talking about is January 15th. As we're well aware of, we've kicked the can down the road, but the road ends on January 15th. And depending on how the U.S. government handles that current dilemma and issue, I think is going to be a tremendous factor in gold. And if all of that kind of falls apart, you could see a dramatic turnaround in the precious metals markets. However, as I said, as a straight technician at our current count, this is what we are looking at. Now, as far as gold and silver have been tracking in terms of whether or not they've been tracking in tandem, there has been a divergence. There's been a divergence in where they are reacting differently on any given day. The key right now in terms of silver is the current support level, which I'll put roughly at 2050, 2068. That is the 61% retracement level. We're trading just a couple of ticks above that. If we stay above that, we have good supportive action in terms of a technical basis. You can see that it's supportive here. You can also see that it was resistance at this point. When I see a particular price point that is resistance and then support, or support and then resistance, to me that lends a lot of strength to that price point, to that number, because we have seen it act not only as a ceiling, but as a floor. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.